Good afternoon. I was still waiting for a couple of people to join in, but I think we're going to get started. So thank you again for joining us today in our seminar series for caregivers and family members. Today we have a great speaker, but before I introduce him, I'll share a little bit about myself. But today our session is on long-term care planning. Know it before you need it. It's going to be a great topic, and we have our guest speaker, Mr. Mark Gottlieb. So let me just introduce myself in case some of you don't know. I am Jennifer Tillman. I am a real estate agent with Keller Williams, and I serve pretty much everyone. I call myself a transition specialist because no matter what the transition you're in, if you're a first-time home buyer, it's a transition. If your family is growing and you need a bigger house, that's another transition. If your family is now downsizing, that's a transition. And also, if you're a senior and now you're looking for 55 and older active community, that's another. So it's all transitions. And so I will help you through any of those. My sweet spot is the seniors and the caregivers because I was a caregiver for my parents and had to move them. However, I'm here for all of you. And so I've been part of the Prince George's Senior Provider Network for many years. And that's where I met the speaker that we have today. Before I introduce him, I also want to say that I am a coach, a certified coach. I work with and transformational coaching as well as downsize coaching. And I'm about to get my certification in grief coaching. So I think that helping people step through all of those life issues, being their best selves is something that's sweet and dear to me. So I am a life coach. Debbie, can you push the slide forward? So in my journey with working with the seniors and the caregivers with Prince George's Senior Provider Network, I decided to create a Facebook page, Caring for the Caregivers, where I post information that's going on in our county, all of the events that are coming up, the speakers, just all kinds of things that will help the caregivers in Prince George's County. So if you would like to know more about these presentations, we have a monthly seminar. Sometimes they're in person, sometimes they're on Zoom like today. If you join that Facebook group, Caring for the Caregivers of Prince George's County, you will know about the events. If you don't have Facebook, you don't get on Facebook, then just stay connected to the emails that go out from me, letting you know about the various events that are coming up. One event that you might be interested in is our shred event, which is this Saturday. We're having a shred, and I'm going to make sure you get the information on that as well. This is how you would reach me, my phone number, my email address, my websites. And so I'm looking forward to our session today with Mark. And I think that might be our next slide to introduce Mark. Okay, so long-term care planning and financing. As I mentioned, Mark and I are members of Prince George's Senior Provider Network. We have been a part of that network for over 10 years or so. The network is to provide information to all of the caregivers and seniors in Prince George's County. We put out a yearly resource guide that has lots of resourceful information in it. And so again, Mark is one of the members of PGSPN, and I am now going to turn it over to Mark to give you his presentation. He is going to be, well, I'll let him tell you all of that. Okay.
All righty. Thank you very much. Appreciate your being here today. First of all, just quickly, I'd like to thank Jennifer for her hard work, not only in the community in general, but she's also past president of the Prince George's Senior Provider Network. So she's been involved with people throughout the county and the senior serving professions. So She's just a valuable and wonderful resource. And again, thank you, Jennifer, for inviting me today. Just by way of background, today's presentation again about long-term care. I have 20 years of plus experience in the insurance services field. And before that, I was actually in the health services field, including running a senior living community and helping a developer of assisted living communities. So I became extremely involved in the world of long-term care and recognizing how important it can be. I do represent multiple insurance companies and a wide array of products. I believe everyone ought to have the benefit of knowing about a wide array of products and which one might be best for them as opposed to trying to sell for a particular company. I do a lot of speaking. I'm on the speaking faculty of both the Montgomery County and Osher Lifelong Learning Institutes. I'm on the Speakers Bureau at Prince George's Senior Provider Network. I've also spoken as part of the Alzheimer's Association. So that's some background that might be helpful. Personally speaking, I'll just throw something in real quick. It's okay to go to the next slide. I'm just going to share this. I'm actually talking to you in the middle of recovery from a knee replacement. I don't know if anyone's in the crowd ever had the pleasure of going through knee replacement, but I say that tongue in cheek, it's not pleasurable at all. And the reason I'm mentioning that is because I've been about 2 weeks into the process, and I'm thinking before this presentation, I'm wearing my spouse out very quickly in the manner of 2 weeks. I'm thinking, boy, if this was actually a reason of a chronic illness as opposed to short-term, getting my knee better through knee replacement without any kind of long-term care planning, it could be very challenging. Certainly the caregivers of the world understand that if any of you in the crowd are serving in that capacity. So anyway, jumping into long-term care, I'll try and move through the slides as quickly as possible. It's a lot of information. I'll be available for questions. I'll be available after the presentation. You'll have my information to contact me for anything you'd like me to send you in the way of articles, different product information about things. No obligation, no fees. That's just part of the services provided. So anyway, first issue, need for care. Am I going to need long-term care? No one really wants to think they're the ones who are going to need it. But realistically speaking, if you talk to anyone in the community, and especially as we age, between people's spouses, partners, significant others, adult parents, etc., we become very aware of the fact that long-term care could be a fact of life. The statistics will say 70% of those 65 plus years of age will need some level of long-term care assistance at some point in their life. Statistics will also say 80% of the care will be provided by the informal community. Usually that the first level of informal care is, of course, someone you may live with or a family member. The other 20% would be considered formal, which means you're paying for those different types of care, which I'll be getting into. There's a lot to know about the field of long-term care, which I'll be covering. We need to think about family issues and impact of a long-term care situation. We ought to be aware of all the different types of community resources that are out there. Long ago, we used to think of long-term care as, oh, I guess I'm going to have to go to a nursing home. And of course, I don't want to go to a nursing home. So there's a whole wide array. There's a whole long-term care service spectrum. People should be aware of the costs of long-term care. They're extremely significant. That's why planning needs to be done. There are an array of resources to pay for long-term care. And first and foremost, people should understand that Medicare does not pay for long-term care. It will only cover up to 100 days in a skilled nursing facility. And after that, you're on your own. So Medicare does not. Medicaid will under the right circumstances. I'll address that as we get into this. And then, of course, there's long-term care insurance itself. So that's fine. We can go on to the next slide. Thanks. So from a family issue perspective, just real quickly, should not be ignored. There's a big emotional and psychological impact of being a caregiver or of being the person who's going to need care. When the family's planning, they ought to take into account the desires of the person needing care, not just what's most convenient for the people who are going to be involved in providing any informal care. Roles and responsibilities of family members. A lot of people think, well, if mom or dad or my significant other has an issue, I can get them through that. Not a big problem. I'm not going to be thinking about paying for long-term care insurance. But a lot of people have a lot of roles in this society, a lot of people working longer in their lives. Family members are working, 53 million unpaid caregivers in the United States. So if you throw a caregiving situation into the equation, it's quite a challenge, both physically and emotionally. Geographic considerations come into play as well. Even if you're, let's say you're thinking your adult child is going to be the one to assist you, they only live, in the next county. That in itself can be very challenging. You look at the DC metropolitan area, try getting somewhere just between Montgomery County, Prince George's County, Charles County, Northern Virginia, et cetera. That trip to help someone out can be quite a challenge. And then, of course, there are people who have their adult children or other caregivers as far as 3,000 miles or further away. So, these are just some things to think about from a family perspective. Long list of resources in the community. I just touch on them for a moment. There are professionals called life care managers, used to be known as geriatric care managers, which can help us navigate the path in assisting to set up a long-term care uh, situation for people who need assistance. Placement companies who can assist you. Let's say you're selling your home. So you're going to need to sell your home. Call Jennifer. She'll get your home sold. Great resource. At the same time, there are going to be people who might specifically be focused on helping you or your loved one to find the right care environment along the path. So there are a number of placement companies. We can go back, please, the other way. There we go. Thank you. Home care agencies. There are a huge amount of home care agencies in the county, throughout the area, and throughout the country. It's a very big field of providing home care. Costs can be very significant, but they're a major source of assistance. There are elder law attorneys to help you with estate and elder law planning, insurance and financial professionals such as myself, a wide array of caregiving communities, and then an array of other types of things a person may need to purchase as part of the caregiving process: durable medical equipment, technology, home modification, transportation services. All need to be thought of within the spectrum of what am I going to need and how much is it going to cost me. Thank you. Next slide. Thanks. So just to give you an idea of the costs, which can be staggering, but this is kind of the bad news of long-term care. High costs. I didn't cost out the adaptations, equipment and supplies, incontinence supplies, etc. We'll just push those to the side for the moment, but getting into formal care, home care can be anywhere between 25 and 35 per hour, and anywhere starting at 300 a day for a live-in. You can use something called adult daycare, where the person in need of assistance will go to a daycare center, much like a child daycare center, but it's for adults who need some assistance and support. That's probably the best deal in town financially. Then we're getting into and you go home at night. Living options, assisted living options, you're really starting at 5,000. Minimal can go up to around 10. That's per month. So start doing your math right then and there. You get a a real feel for why this is such an important topic to do your financial planning for. Nursing homes, 9 to 12,000, generally speaking. Something called memory care. Many of you may have heard of that at this point. It's really focused on those with more intense dementia and Alzheimer's disease. So higher staffing of acuity, higher staffing levels, therefore even more expensive than what you would pay for general assisted living or nursing home. So very significant costs associated with being able to have long-term care provided to you. All righty, next slide, please. So just some issues on home care. I mean, a lot of people, and I'd say the popularity is I want to stay in my home. I don't want to move somewhere else. People should be aware of that. Costs can vary based on arrangement. And again, the big challenge with planning for long-term care and for budgeting is what level of need are you going to have? Are you going to have a very basic need? I need someone to come for 2 hours, help me take a bath, help me get dressed, maybe prepare my meal for the day. Or it can span anywhere to 24 hours a day. So the costs can vary very much, and it's very hard to plan as a result. There are companies that do registry care. In other words, they'll help you find a home care person for a fee, as opposed to what's more typical as a home care agency, where you see them listed, dramatically. Pro-Aging Guidebook and the Prince George's Senior Provider Network Directory. And those are fully certified agencies that will come and provide personal services. There are a number of coverage distinctions when you're talking about if you do have long-term care insurance. You have to be aware, and I'll talk right at the end about this as well. You have to be aware of what level of home care that insurance policy will cover for you. Most of them will pay through what's called reimbursement. So they'll reimburse for the costs of care that were provided to you. There are a few policies that are called indemnity policies, where they will just provide you the flat fee that you paid for up front. So I buy a policy that's going to give me $5,000 a month of coverage, and then assuming I can show that I'm going to need 5,000. I'm going to need some level of care. They're going to give me that 5,000 a month, but they're not going to monitor me like through the reimbursement method about exactly how many hours I'm getting or who's providing the care. They're just going to send you a check that is known as indemnity care. There's one other thing most people are not aware of. If, let's say, a family member is providing some care to you, there's actually a way where, you can sign a legal document, a personal care agreement, and then that money that's given to your, family member or community member can count as an official payment, which can then be used to justify being approved through Medicaid for long-term care when and if the time comes for that. Next slide, please. So there are a number of financial resources a person can use. I certainly, if you see the bottom of the page, the very last bullet on the page says insurance. So this really isn't an insurance presentation. It's a really planning for long-term care presentation, how we're going to pay. First and foremost, of course, can be asset and income streams. If we're lucky enough to have very good asset and income streams, we might decide we're going to be able to use those to pay for care. If that's the case, that's terrific. Do you get a pension or not? How much is your Social Security? Do you have any annuities, any 401 or IRA accounts that you're then going to be able to cash out to get money? Remember that on those, they were pre-taxed, which means you're going to be taxed on that money before you can then take it out and use it to pay for care. If you plan to sell your home, then that's great. There's your asset right there. The money that you have, that you've accrued value, may be what you use to then go out and pay for assisted living, as an example. course, if you're planning to stay in your home, then that's not going to be an option for you. You're not going to want to sell your home. But then in that case, you may be looking at something like a reverse mortgage, which you may have heard of. There's a lot of advertisements about that. Number of professionals in our area who just do reverse mortgages. In that case, they can help you get value out of the home, and you could then use that money to help pay for care. It also relieves you of any payments you still may have on your mortgage. So it could be a very valuable alternative for you. There's a Veterans Aid and Attendance Program for those who are veterans. You could get some money for home care or for assisted living. I'll just mention that, get into more detail. Again, if anyone thinks that's something that may be a benefit to them, please follow up by getting in touch with me. I could send you some information. Medicaid, as I mentioned, if you qualify, it's financially based. You have to have lower incomes. If you do, there are a number of home care waiver programs where you get some home care assistance, or bottom line, if you need to go to a nursing home and you apply and get on the Medicaid program, then they will pay for your nursing home care. There's also something called Medicaid compliant annuities. If you or a loved one are going to have to enter into a nursing home and you have some assets, you don't want to end up just having to use all your assets to pay for nursing home care after all the time you spent to build those assets up over a lifetime. There is a tool called a Medicaid compliant annuity through which you can reposition some of that money under certain circumstances. Again, if that's something of interest to you, please follow up with me and I'll provide that information. Programs called life care settlements, where you can basically sell your life insurance policy to get some of that money back. Ideally, you may get pennies on the dollar, but when you need those pennies right then and there to buy some care for yourself or a loved one, you might have to do that. There's also life insurance cash values. People should not forget, if they had let's say, a whole life policy from many, many years ago, it might have built cash values, to take a look. There might be some money to access out of there. So there are a number of ways by which a person can pay for or supplement payment for long-term care, but not the least of which would be insurance. With that, I'll go on to long-term care insurance. So we can please go on to the next slide. All right, thank you. Some issues before deciding whether or not you want to try to buy long-term care insurance or whether you'd rather self-insure. And again, this is tricky. If we're very lucky in terms of the amount of money we have, we might think we'll be able to self-insure, not really knowing, of course, how long the long-term care need will be. Once again, as I said right up front, that's the biggest challenge. We really don't know what we're going to face in terms of long-term care. Are we going to need 1 or 2 years, 5 hours a day, or are we going to need 5 years at full-time round-the-clock care? That will have a major impact on the ability to, afford long-term care. So just some issues. If you say, well, I'm just going to self-insure, I don't want to deal with paying any insurance premiums. Some of the things we need to think about: how long might we need care? Again, we don't really know that answer, but we may have some indications. We may have some history, physically or cognitively, that will give us that kind of input. Expectations for growth of investments. I've had a lot of people say, well, if I take this chunk of money, I invest it, I make 10% of my money per year. I'm 65 years old. I'm not going to need care till I'm 90. I have 25 years of 10% growth. By then, the money is going to be there. Why do I need long-term care insurance? And of course, can we be sure we're going to be getting 10% on an investment a year? Secondarily, do we know what age we're going to need long-term care? When people say, well, by 90, hopefully I'm okay, I'm in pretty good shape, I'll go till 90, so my money will grow till then. And then boom, at age 72, they have a stroke and all bets are off, and there won't be any growth in your investments till age 90 before you need that money. Again, be aware of any post-tax money that will be available to pay for long-term care. So if the money you're going to be using would be from an IRA or 401k, remember some of that is going to be taxed before you then have access to that to pay for care. So with that, on to the next slide. So now we're into the field of long-term care insurance now that we've looked at some of the other options. Long-term care insurance basically focuses on paying for services that assist you when you have a need for 90 days or longer. That's typically considered the minimum length of long-term care is 90 days. Triggers for accessing the benefits. You buy a policy. When can I use that policy? Either because you now need assistance in performing 2 or more activities of daily living, bathing, dressing, grooming, ambulating, transferring, incontinence, etc. Has to be 2 or more, and or the need for assistance or supervision due to a cognitive issue. So you could be totally physically healthy, but you have issues cognitively due to, let's say, typically dementia or the onset of Alzheimer's, and you need supervision, or you could be a danger to yourself or others. That's a cognitive issue for which a long-term care policy will pay out immediately. That's a little background. Or you can be totally fine mentally, but you have a chronic illness or condition which causes you to need assistance with 2 or more activities. Either way or both will trigger a long-term care insurance policy. Next, please. So why would you buy a long-term care policy? Main reasons consistently on all surveys: security and peace of mind. We just don't know what's going to happen. Well, we want to prepare for the future. In my mind, it's part of retirement planning that could be too often ignored in many cases until it's too late, frankly. So it's good to do your planning up front. That was the name of the presentations. Know it before you need it. And of course, if you need it, there are also things you can do to get, some money to pay for care, although it won't be through long-term care insurance, because long-term care insurance is what's called underwritten, meaning they will look at your situation health-wise and determine, they being the insurance company, then they're going to want to determine whether or not they want to underwrite you and give you a policy, whether they're willing to take the responsibility to pay for your care or whatever you bought in the way of coverage for care should you need it. So protect significant others from the stress of caregiving. I used my spouse as an example. I'm very lucky. I've only had it impose on her now for 2 weeks, but what if it were 2 months, 2 years, or longer? And I see what's involved day to day in being a caregiver. If you have some money out of a long-term care policy that you can use to pay for a professional to come in and do that care, you're protecting a significant other, very much so. Protecting your assets. I have some money set aside. I'm hoping to give it to a significant other or pass it along to a grandchild, whatever. Well, if it gets used up paying for my long-term care, that asset has not been protected. So it's a good reason to buy some long-term care. If I need a chunk of money to pay for care, let the insurance company pay for that, still protecting that asset to pass on. Of course, having access to enough money to pay for care allows you a choice as to how and where care is received. Just being able to afford long-term care, I will say, several things. A lot of people get proposals for how much is long-term care insurance going to cost me. They find out it's beyond their budgetary possibilities. You don't have to buy inflation protection. I'll tell you a little bit about how to define a long-term care policy and how to design it. But they're often designed using an inflation protection rider, but that adds twice the cost to the policy, which sometimes therefore makes it impossible for people to practically be able to afford to buy the policy. So I just try to point that out up front. Also, don't overbuy. We all know we'd like a lot of coverage, but we don't want a lot of premium. So how do we balance the two to get some protection, without being overextended? So that's just some thoughts about buying a policy. Why buy? And some considerations. So let's move on to the next slide. Likewise, why not wait to buy? A lot of people I speak with, I'm going to do it. I'm going to do it. Yeah, call me back in 6 months. Call me back in a year. Everything's fine right now. And then you get the dreaded call from someone who just received a diagnosis from their physician, and now they're very anxious to buy long-term care insurance. At that point, do they still qualify? What kind of diagnosis did they have? Is that going to knock them out from being able to be approved for long-term care? The longer you wait, the higher the percentage of declination, certainly by age. Uh, there are, of course, select disqualifiers. As I said, there are thousands of different diagnoses that people get over time. So we hope we're able to buy, maybe immediately, or certainly hoping to buy before any of these things befall us. And of course, prices go up over time by age, and just the different products get priced up as well. So shouldn't procrastinate on something like this if you believe long-term care insurance is of value. So with that, we will go into some of the details of the types of policies. I'll try to be fairly brief in doing so. So next slide, please. Okay, so your options. So this is something people can get overwhelmed with. I've tried to pretty much summarize it on this one page. It could be a lot of detail. I could speak an hour about these options, but here's a quick overview. Again, anyone interested, I could certainly send you a lot of information about all of these different types. But in summary, there's the basic long-term care insurance, kind of called traditional, or at least I call it traditional long-term care insurance. It's straight insurance. It is not connected to any type of life insurance, not connected to any kind of return of premium. You buy a certain amount of coverage. It's there if you need it. If you don't need it, you don't use it. So that's one of the objections to it, the use it or lose it objection. Okay, I paid 2,500 in premium for 20 years. I think that's 50 grand. I or my significant other pass. Hey, we didn't use any of that 50 grand or use any of the amount. And for the 50 grand I paid in premium, I might have gotten 150, 250 in coverage. But in any case, I pass. My spouse calls and says, Mark did not need long-term care. So look, we've put all this money into it. How much am I getting back? The answer is nothing. It is use it or lose it. Because of that, it's going to be priced lesser than the other type of coverage, which is called hybrid policies. With hybrid policies, they combine both either life plus long-term care or an annuity plus long-term care. So if you combine it with life and long-term care, that's a hybrid policy. Hybrid meaning it can be used for either of these purposes. So I buy $100,000 hybrid policy. I have 100 grand. I can go here to pay for long-term care, or here is a life insurance policy. So if I don't need long-term care, my beneficiary is going to be getting that policy back in the form of that $100,000 death benefit. So that's certainly a very popular option for people now. They don't have to worry about the use it or lose it. They also don't have to worry about future premium increases, which can occur with traditional insurance policies. So, basically, those are the couple of types of policies, and I could get into much more detail. But again, the time frame does not allow for it. Feel free to reach out to me. Please be aware that long-term care riders, so you buy a life insurance with a long-term care rider, it has a different benefit structure than if you just buy a life insurance with, say, an accelerated death benefit or chronic illness rider. They can pay out very different. A lot of them have different features, grounds for paying out. So you may not be getting the full value back of what you're paying for. So I try to make people aware of that because a lot of agents do tend to categorize a lot of these different hybrid policies as long-term care policies, and they're technically not so. So one has to be extremely careful about reading the outlines of coverage and the contracts in terms of figuring out what is it exactly I'm buying. Is it a life with long-term care or life with accelerated death benefit? One other option is something called annuities plus long-term care. So you take a certain amount of money you have accumulated. You cannot buy it through a premium as opposed to these other things. With an annuity, you're repositioning some money into a financial product called an annuity. Serves as the base for paying out for long-term care if you need it. It will pay out tax-free for long-term care benefits. And it usually is a secondary pool of money for long-term care, so you can add additional coverage. So that's called an annuity plus long-term care. So for those of us who've accumulated some money into some type of product and some type of financial product, a savings account, an IRA, a 401k, on and on, there may be merits to looking at the possibility of repositioning some of that money into a hybrid product, which will also provide us with long-term care protection. Again, there are a lot of different methods of payment depending on the type of product we just talked about. It could be anything from single pay, you just do one lump sum, to monthly premiums like any type of other insurance product that you buy. Repositioning the money involves something called the 1035 exchange. Again, I have a lot of information that I can share with you if that's an option that you'd like to learn more about. Next, please. We're at 2:43. I'm going to try to wrap up in the next 5 minutes. This may be a little redundant, so here's the insurance options again. So there's the annuities. We talked about veteran aid and attendance. We talked about veterans products, Medicaid compliant annuities. There are also a couple of products called annuities without long-term care rider. So there are some people who would not qualify for a long-term care rider. There are some products where you can reposition money into an annuity. It will grow. And then when you're annuitizing it, meaning you're saying, okay, reached a certain point, I want back annual payments out of this pool of money. If it's associated with having a chronic illness or condition, a few of these policies will double the amount you're getting out that you can then use to pay for long-term care. Not quite as clean as a true long-term care policy, but again, it's an option. It can provide some additional money to pay for care. I'll just point out real quickly, I know there are a lot of federal employees in the area that either enrolled in Fed LTC at some point or were going to. I know that's been on pause now, I think probably for a few years. So that's really not an option. Doesn't necessarily mean it would have been the best option anyway, because the Fed LTC program does not recognize some of the features of more private policies. But that is an option that certainly a number of people who live in the metropolitan area have made use of. On to the next slide, please. Okay, so this may be the last slide. For those of you who already own a policy, typically when I make a presentation, some percent of people will already have bought a policy, but one of the issues is a lot of people might have bought a policy years ago, stuck it in a drawer. They don't really remember what they have, or they never really understood exactly what they have. So you really, if you have a policy, if you're in this crowd today, make sure you take it out and look at your outline of coverage. This will give you specifics about types of home care they'll cover, whether or not they're going to cover just activity of daily living versus what's called instrumental activities of daily living, meaning the person you pay for and pay through this policy can help you with some other supportive things, let's say like bookkeeping or grocery shopping or things of that point. A lot of people are confused. They call and say, okay, I now need to trigger my policy. I bought a policy years ago. I now have a problem. How soon can you give me coverage? And one of the first questions will be, what elimination period, otherwise known as a waiting period, is associated with your policy? Could be 30 days, could be 90 days, but that basically means you have to pay out of pocket for that period before the insurance company will then start paying on that policy. So it's very good to be aware of all this before we need it, rather than calling in saying, I'm ready to have someone cover me through this policy. What do I need to do? Because we want to be prepared ahead of time. Known as planning, know it before you need it. Make sure the triggers are, consistent with the generally accepted triggers for long-term care policies. If you bought a policy with inflation, be aware of what the current value is. If you bought inflation, let's say started with a policy, I paid $100. I'm sorry, I got $100 per month of coverage. That's extremely low, of course. So let's say 100 a day of coverage. But now it's so many years later. Do I now have $200 a day of coverage, $300 a day of coverage? That will depend on the form of inflation protection that you bought when you bought that policy. So be aware of that. Check with the insurance company and see, has your policy grown into what amount? So now I'm going to start needing long-term care. Now I know really what I have relative to the policy I bought in order to pay for services. Last but not least, if facing premiums, and this happens a lot with the traditional policies, you buy a policy 4 or 5 years ago, all of a sudden you get the dreaded letter. Dear Mr. Gottlieb, we have to ask you to increase your premium from 2.25 a month to 275 a month. I don't really want to have to pay another $50 a month on my premium. So, okay, if you don't want to pay an extra 50 on your premium, here's some options we can offer you to keep the premium the same. Very quickly, my advice is be careful when you make those decisions. Typically, you can lose a lot of the coverage you've been paying for by just trying not to have to pay that extra money that they're asking for when they reevaluate your policy and come back in for an increase. So we have to do the math and figure out how much money am I losing a day by not keeping the policy the way it is, or how much growth will I not be able to accrue over the next number of years if I keep the policy the same but decrease the level of inflation protection that I'm going to be getting, et cetera. So you typically get a detailed letter with all of these choices, and then you have 30 to 60 days to make a choice about, is it worth not having additional premium charged to me, after a certain date, relative to what benefits I'm going to be losing by doing that. Next slide. I think that might be it. There it is. Additional information. This is my information. Hopefully take it down now or get it through Jennifer or whatever anyway. So I think
Yeah.
we
Oh,
are left with a
let's go
little
back in
time.
case someone wants to take it down. Let's hold it there for a minute. In case, someone would like to actually take that down.
Right.
And
Well,
I
I hope so.
definitely will be sending it out to everyone.
Great.
And okay, so now we can still ask if there's any questions. If you have any questions, you can put them in the chat, or if you raise your hand, we will unmute you. So, okay, so I see we have, okay, Jim Henderson is just stating that he loved the presentation. Great presentation, Mark.
Thank you, sir.
And let's see. Okay, yeah, you're just getting great presentation. Don't see any questions yet.
No,
Question.
appreciate.
I have
Oh,
a question.
yes, okay. Is this, and who is
Yes.
Miss
In the
Anna?
process, I'm one of the ones that he just spoke about as far as having to make a decision. So I don't want to take up everybody's time, but I because I already have a long term the product. But and I'm in the process, like I said, having to make a decision. So am I able to call him to help him to assist me with that?
Definitely, and you
Sure,
see,
I'll give you some input.
Thank you.
and the number is 301-332-4337.
Thank you.
Okay. And Mark, that was one of the questions I was going to ask you is if someone has a long-term care policy and maybe they're not able to really decipher everything, would that be something that you would be able to assist with, at least to some extent?
Yeah, I will generally provide, a couple of minutes of free advice. I don't charge. I mean, I wouldn't, review a 20-page document line by line, to advise to that extent, but I will certainly, take a quick look at things and advise people what they should be thinking about. And again, when you have a long-term care policy, the very first page, the cover page, will generally list out how much coverage you have, because some people are not even aware of that. Most people who bought a while ago, they will have bought something called years of coverage and then amount of coverage. So you're basically talking about years. So let's say, okay, I have 3 years of coverage. That's 1,095 days. All right.
Mhm.
And then the amount of coverage you have will then be based on what the baseline was. So if you bought $100 a day of coverage, you would say 1,095 days of coverage that you have 3 years times $100 a day. That would give you 109,500 in
Mhm.
the base year. And if you had an inflation factor, that 109.5 would be increasing based on the type of inflation you have. Uh, Now, one other quick point, if you don't mind me making, and I'll just take 1 minute because it's
Okay.
relevant. So they say you have 3 years of coverage, but that's 3 years. So 1,095 days is based on you're going to use it every one of those 1,095 days and for the full amount that you contracted for. So if you only use the policy every other day, would actually last 6 years, not 3 years, because it's based on the days of care that you purchased.
Okay. Well, we have two other questions. We have
All right.
one from Jackie. How do I find out about VA benefits?
I
And-
could certainly send you, Jackie, some information. If you email me, I will send you some information that I have collected about VA benefits, and then you can take it from there.
Okay, and then Mark, you can also send that to us and we can also put it out to everyone in case other people might have
Hmm.
that too. But
Okay,
if you
that's
want to
fine.
email Mark directly, it's the Mark Gottlieb at gmail.com. It's on the screen. And we have another question, I believe. Someone has their hand up and I can't figure out who that is.
Dolores Miller.
Oh, okay, Miss Miller, yeah, go on.
Okay. It's just a general question. I have a long-term policy that I've had for about 25 years, and it has increased with inflation each year. The different items go up, but I really don't know how to compare what I have versus what I really would spend. Say, for instance, you were saying some service $100 a day. It's $200 a day now. But how can I find out in the state of Maryland that $200 a day is going to be sufficient for what I need?
Well, the sufficiency will be based on how much care you need or what environment you need it. So for instance, 200 a day is 6,000 a month. If you multiply it by 30 days, will 6,000 be enough? It depends on how much care you're getting and at what level. So let me use an example. If it's assisted living, there are some assisted living communities that charge 6,000 a month. So using that example, that 6,000 you have would pay for a month per month in an assisted living community. If you went to, let's say, a more upscale one that was 8 or 9,000 a month, you'd still have the 6,000 a month from the policy you bought, but then you'd have to then find the other 2 or 3,000 a month to pay out of pocket. That's part of the shopping process. And that same thing with home care. If you need 4 hours of home care a day at $30 an hour, that's 120 a day times 30 is what? Let's rough it out to what, 4,500 a month? In that case, you'd have more than the 4,500 a month to pay for it. If you needed 12 hours of home care a day at 30 hours an hour, or 360 a day, 360 a day times 30 days is over 10,000. Then the 6,000 you have at this point would pay for part of it, but you'd still have to come up with some additional money for the difference. So it really all depends on the hours of care you need, if it's home care based, or the living environment that you're choosing to live in, if it's community facility based.
All right, thank you.
And Mark, one more thing, you may have mentioned this, but as you're going through pricing, the home, the long-term care, does your age go into that, like the younger you get it, the less it's gonna cost you, does it
Absolutely.
play in?
Age is always one of the factors. You're
Okay.
talking about age, health status, amount of coverage you'd like to buy. So it's
Okay.
really kind of a la carte. You might say, well, I'm going to just pick an average. You never quite know. That's the problem. You might buy 3 years of coverage. You might end up needing 5 at the end.
Mhm.
Even in that situation, at least the first 3 were covered. Then you'll have to find other assets that you have to pay for that next 2 years.
Okay.
So that's an issue. But yeah, so you're talking about age, and then you're talking about how much coverage you want to buy, and both in terms of the length and the amount of coverage per day or month.
Mhm.
Then we run quotes. Here's a typical example. Someone will say, here's what I'm looking for. Tell me what it's going to cost me. And I come back and I say, that's going to cost you 3,500 a month to get that kind of coverage. And they go, well, 3,500 a month is out of the question. I'm sorry, maybe 350 a month. Let's put it like that. So now you say 350 a month, no can do. I can do up to 3 max. Where am I going to find that $50 to lower that premium to be able to bring it to my affordability level of 300 a month? And then we have to play around. Are you going to get 10 or $20 less a day in coverage? Or instead of 3 years, we're going to make it 2 years, etc. So this is the whole process of of playing around with the quotes. But truly, the younger a person buys a policy, the better off they are in terms of the pricing. There's no question about that.
Okay, well, thank you. It was a great presentation, and of course,
Appreciate that.
talking to you one-on-one, about your specific need is always a good follow-up to your presentation. So I hope that you guys have Mark's information here and you will reach out to him to get, a personalized plan, or at least just get the knowledge. But thank you for attending. Mark, thank you again for presenting.